Good morning, everybody. For those of you who don't know me, if it's your first time here, I'm Doc McGraw, and welcome to the S&P 500 Market Report and Daily Plan. Please click subscribe if you're on Twitter, retweet. Substack folks restack, and YouTube people do whatever it is that YouTube does. And let's get started. So we'll start with the overnight session, and short version of the overnight session is nothing happened. Where are we? Tiny little pullback, not even really worth mentioning. We closed near 50, near 77.50, and we'll talk about the significance of 77.50 shortly. Yeah. Good morning, Roman. Can I count on you to retweet, please? I get very little retweeting from Twitter for some reason. I get hundreds viewing and nobody retweeting. But anyway, um, not nobody, like one. And we just kind of chopped around a little bit. We were marginally green, and PPI just came out, and the unemployment numbers. And I guess the market wasn't impressed. Doesn't look like they were particularly depressed either, because we don't have a big 10-pointer, but it's starting off in the wrong direction if you're a bull. Not that it's overly concerning. And so that's where we are now. Good morning, sir. We're just getting started.
Good morning, everybody.
And so after the PPI numbers came out, a little bit of a reaction, nothing to get excited about. We had a Fed person of some sort speaking at 8:15, and we have another one at 8:45, and I imagine they're talking about the CPI and the PPI and whatever it is that they're going to talk about. And I don't care what they say. I care what the market thinks they said. Okay, so the expected move when I checked was roughly 77.35, 77.90-ish. We were a little higher then. So just to frame where that is, the expected move was roughly down here, a little bit above yesterday's low. You get it. I think that's a version of welcome back. Um, Basically near yesterday's low, and the upper part of the expected move is basically the expected move is framing yesterday's high and low. Well, no, the top is a little higher, 77.90, and we'll get to that in a minute. So 77.50 is the inflection point. And if you've been watching this movie with me, which I'm sure you have, you're probably aware that that's kind of where we've been rotating around. Let me skip ahead to show you this real quick. So this is a daily chart of the S&P 500, and the red and green are just the Friday to Friday expected move. So this is expected move taken from last Friday to this Friday, the straddle price with Doc's secret sauce proprietary adjustment. And it's a secret even to me because I tweaked it so many times, I don't really remember what the last tweak was. But I do know that it works for me and for my subscribers that use it. And okay, so what I'm bringing your attention to is where we've been. We've basically been meandering around this box last week and this week. And if we just kind of frame it a little bit, so last week we had that breakout day, we had that intraday high. We closed at, I think it was 7557 point a couple pennies, give or take. And so that's the closing high. So that's sort of the number that's in a lot of institutions' minds, that it's close to close. Intraday, doesn't count as much for them as it does for us. Um, But I mean, it still counts because you see a lot of action at 95. And so, other than this is where we've been, 7,500. Also, while we're at it, I'll skip to the TA 101 department. So, my former mentor used to always talk about railroad track 20 and 50-day moving averages. And so, if we switch gears and zoom out a little bit, you see that basically for the month of July, the 20 and 50-day moving average, the dash line and the solid line, were basically flat. Before that, it was a little overextended. So you kind of from that frame of reference, you kind of knew that we were in trouble when the 20 started converging so much from the 50, when it expanded that much. And we managed to not cross. We managed to not cross after the yeah. And so all I'm saying to myself, I'm saying, self, the degree of this liftoff is a little fast, as we know, because of this, but the absolute value of the distance is not a lot historically. So this consolidation, just from a strictly chart point of view, is actually kind of constructive, just from that point of view. Okay. As my old TA mentor used to say, healthy railroad tracks, and we don't really have that now. Separation happened a little quickly, but not enough. You have to call it stretch. Okay. So, like I said, we had the Fed speakers, we had the PPI, we had CPI yesterday. Apparently, the market liked it, like the TV commercial used to say. Mikey liked it. Um, the market liked it, and for extra credit, what product was the Mikey liked it commercial in? Answer on Twitter. Um, we had the 10-year auction yesterday, which I saw different macro bro comments. I saw some comments implying that the Fed was withdrawing liquidity, the Treasury was going to be withdrawing liquidity, and that sets us up for a crash or even a 20% pull down. I'm not sure if it was Cheerios. It definitely was a cereal commercial. Life cereal. Is that it? That sounds more like it. Um, that the market's in. Okay, so somebody has to hit AI and find out. I know it was like a off-brand cereal or something that people were trying. Anyway, um, I saw some macro bros commenting that the um, the way the Fed issuance, that they're withdrawing liquidity, and it's going to set the market up for a possible 20% pullback in the Qs into October. All I can say is that the Treasury Secretary is a former hedge fund guy. He's been real careful on where keeping rates where they are so the market don't crash ahead of the election. That ain't going to happen. At least not because of him, not because of the Treasury. Maybe kicking the can down the road, maybe whatever, but not saying we don't have a 5% or the usual September, October crappy trading, but not from that. I do think that we unclenched from August, where we've had historic low, where I mean not historic, where the VIX is at a 52-week low, and I'll talk a little bit about what's going on in the volatility space in a minute. The VIX is going to unclench from that 16. There's a cap at 16 for now in the VIX options. And so, yes, we could unclench. We are free to move around the cabin in both directions. Um, August is going to unclench the August S&P 500, but heading right into the big September monthly, the quarterly. Typically, what happens historically, and historical patterns might rhyme, but they're not in any way predictive. Typically, after August OPEX, we get this period of choppy, sloppy weakness. We have Jackson Hole coming the end of August just to add a little spice. Then we kind of tend to firm up from wherever we are into the OPEX, into the for the last 2 weeks, 10 days, whatever it is, into September. And I don't know if it's a 4 month week or 5 week OPEX cycle. And then after September OPEX tends to be where things get a little dicey, depending where the JP Morgan collar is, the quarterly is in relation to that. Then we have the October. Okay. So Cisco, they weren't impressed overnight, but they were impressed with CoreWeave yesterday. I saw Hewlett Packard, HPE, whatever's going up. So it's the whole AI infrastructure story, enablers versus hyperscalers versus all that. Exactly. Well said. It's a see, nothing to see here. Move on. Exactly. I thought Life Cereal was great. At least it had a little taste compared to cornflakes. Okay. Um, so today we have some China names. I didn't see how they do, and we have AMAT Applied Materials after the close. That's obviously the main read through in the semis, capex, all that bullshit. Um, and so the levels and lines we kind of talked about that. So yesterday we opened near the high of the day. Let's just do a quick little price action check. Yesterday we opened near the high of the day or off of that soft CPI print or that they liked it. Kind of double bottom dish down right below that 77.40, which was really kind of tied to the 77.50 almost structurally. Couldn't really break, and then we chopped. We had some end of day weaponized algo monkey business where they buy a few thousand contracts of calls and puts near the money and they play games. And then Charm ends up taking us where it takes us. I managed to get to squeeze a nice scalp in at the end. The final minute, it was a 1 minuter. I caught him in the last minute. I saw what they were up to. And we do that in the room. We play it on the premium Discord channel. We like to play pinball where we're kind of watching the positioning come in and it changes real fast. You kind of have to watch. Oh, there's 2,000 puts here and there's 2,000 calls here, right? One strike in the money, out of the money, at the money. Who blinks first, or where does an extra 500 or 1,000 calls or puts come in that moves the tape in the last minute or two? It's a lot of fun. It's a lot of fun. Um, And so, yeah, so that was yesterday. So we're at that 77.50 inflection point. And when you think about it, or when I thought about it, the all time high, closing high was 77.57. And so there's a lot of structural stuff, technical term, sold around 77.50. There's a lot of hedges and synthetic long, shorts, all kinds of crap around 77.50. So it's not like a great mystery why 7750 is acting the way it acts. Just trust your eye. Look across. Green is market maker, long, customer short, hedge, whatever. All the way till the end of the month, they like 7750. So all things being equal, we kind of get stuck to it, get sucked to it from the bottom, get sucked down to it from the top. Now, of course, there's bets up at 7,800, 77.95 was the intraday high. There's bullish bets up here. Red means customers are long. They bought this stuff. Market makers are short. They hedge in that direction. But to hedge in that direction, first we have to get there. We have to get through the stuff that's blocking it. And real money buyers have to come in. Market makers hedging doesn't happen by magic. If nobody buys and nobody sells, the options decay, and the market makers hedging is not gamma; it's charm, It's delta decay. To the downside, 7,700 is kind of where we have some stuff, and then we have out of the money positions that are here from whatever they're here. And that's kind of the way the tape lines up. And I believe, as I said in my notes somewhere, 7,700 to 7,800. I should have said it if I didn't. I didn't say it. Okay. 7,700 to 7,800. That's basically the question for now, the short term question. I don't see Vol Trader yet. And so let me get to one more thing. Oh, question. So the structure and mechanics of hedging is sold us. So the structure and hedging mechanics is whole. Not well. The all-time high was 77.57. So that's a 7-point difference. I wouldn't say that. What I would say is 77.50 keeps being an inflection point until it's not. We can close 77.60, 77.70. We can close 77.20, 30, but until something gets us out of the orbit of that, we're tending to get into the orbit. You're welcome. We're tending to get sucked back into the orbit. We did this. Okay, the 20 days, we talked about that. And so dealer, here's where I said it. Gravity, yeah. So dealer positioning is concentrated at the edges, broadly 7,700 and 7,800. The middle is short gamma dominated, other than that 77.50 that ends up kind of being like where we center around. And now 77, 75, 77, 80 is kind of, if we move up, that's kind of the direction we'll head. Very similar setup to yesterday. Each day, the positioning is very similar. 77, 75, 77, 80, and we might not even get there. 7,800 is a shock absorber on top, and that's it. I left out the bottom, but I have it down here in the paid note. So those of you that have the paid note, you have it down. You have it down here. And let me get to. Boy, he types fast. Just that many characters would take me about 2 months to type. So let's get to this. Okay. So here's a 0 DTE and 2,000, 3,000. That's kind of chunky. 7,800 is sold. 7,750 is sold. 7,700 is sold. Clear frame, very clear frame. Below 7,750, 77.25, nice round number, sold. Nice and clean. Above 77.75, 77.50. If over here we get attracted toward 80, doesn't mean we get there. As soon as we stall, the buying turns into selling, absent. Yeah, PPI was this morning, correct. And then you kind of tend to get sucked back into here. As we go up here, and there's buying, but remember there's selling from the positive gamma above. And so you have a nice little box to trade. If somehow we break 7,800 finally, then over, up at 30, but, think round number, and we're probably not going there. It's pretty far outside the expected move. And yeah, that's it. And then below 25, 7,700, then you have sold stuff below. So supportive area down here, premium sellers like me. What happened? Oh, I made my mouse cursor bigger. So if those of you who watch regularly might have noticed that the mouse cursor is bigger, so it's easier to follow. Part of a public service. Um, Up here, if there's juice above 30, I'll take it. If not, I'll kind of figure it from there. He would. He would. I like the Cisco earnings report. Okay. Um, let's look at market maker positioning, and let's go to the note where I have it slightly annotated. Actually, let's go to the Discord server because all this stuff is also in the Discord server, so you guys get to see it. And a video is coming of a map to the Discord server. Where is it? Over here. And it's in Doc's commentary section where most of the stuff that's in the note is as the sausage is being made, as well as stuff that ends up on the cutting floor. Because I can't put everything I think in the note, otherwise you'd be reading stream of consciousness. And so there's that 77, 80, 75 area, red, market maker short gamma, naive. Oh, thank you. Yes, we reorganized it. I actually have a little written cheat sheet, and I have a longer one. I'll be mailing something out, and there'll be a video coming out. Yep, the gamma heat map right here. Um, and so you see red over here, the middle over here. Red if we meaningfully break below 2530, right down here. 7700 supportive. Disaster 7650 ain't happening if unless something unforeseen happens, just like 77. So 77, 7870 and 7650 both ain't happening, but they're theoretically in the frame. Okay, realistically, the frame puts us over here with an expected move of 30, let's call it. So let's say 60, double the expected move. So double the expected move from 65. Well, 30, the expected move puts us right up on top there, puts us right up here. And so I have the subscribers get these. I have two trading view strings, proprietary. I make them. The computer doesn't, the algo doesn't. I do based on positioning and TA and whatever I think. And so these are the main levels. It's called main string, and this is the more detailed granular one for scalping. And so you see the 7750, the 7780. If we can get up there and accelerate, that's actually what we're accelerating toward. Then we have the upper rail, the all-time high, and the shock absorber. And there's really nothing to speak of up until 7730, 7725, whatever. Don't torture the data. Below, if we look at the orange, those are the main zones, but there's some little inflection and nuances in between, depending how you like to trade. Um, I kind of think of it like multi-time frame analysis. I kind of think of it if I look at my S&P chart, I have a 5-minute, a 15-minute, a 65-minute, and a daily. And sometimes, depending on what I'm doing, I might look at a weekly. Okay? So I think of it that way. The 0 DTE one is like my 15-minute time frame. It's my action time frame. But I have to be aware of what's going on the daily and the weekly, otherwise I can get blindsided. And at the end of the day, the market makers have to hedge their whole book. But the zero DTE, since it's going to be most fluid and changing the most, a change in this, if somebody buys some September contracts, it might be a momentarily hedge response if they do a big trade. But other than that, there's not a lot of continual hedging, whereas we're over here and somebody buys 1,000 contracts right here or right here of calls or buys puts right here, it changes the landscape fast. Does that answer the question? But as you know, I like to kind of, this is where I live. And when I want to kind of zoom out, I try and get a picture. I look at this, and this is updating real time anyway. The colors change. And one of the things that you get in the Discord server is, and somebody mentioned it, is because we were talking about like, well, what's the value? What sections? Doc's commentary, the trade alerts, the not trade alerts, the trade ideas, et cetera, et cetera. And it's more the thinking through setups and seeing where we are. And that way you learn to fish by yourself. That way I think through it, you think through it, we talk about it together, and you begin to develop a framework for incorporating this into what you've been doing up until now. Because it's probably not your first trading day ending up here. You've probably been trading for a while. You probably have been doing iron condors. You've been doing scalping. You've had some success. Otherwise, you wouldn't be looking to it. You've obviously had some, like all of us, you've had some WTF moments and some days where you go, oh man, I can't believe I lost a whole day, a whole week, a whole month, a whole quarter. Um, and we're trying to improve. We're all trying to improve and graft something onto what we do. This is my main thing. Doesn't have to be your main dish. It could be your side dish. This is my main dish, but it should be part of the meal. It's not black or white, zooming and examining the whole picture. Exactly. You're not going to get black and white from me that often. You're not going to get black and white from me that often. My Zen mind doesn't work that way. Um, used to. My Western mind used to work that way. A dyadic binary yes no mind. But my holistic interconnected mind doesn't work that way anymore. Um, okay. Chewy, you got some charts for us?
I do. I gotta go quick here. Let me share my screen. You might hear my typing. Here we go. Okay. Let's pull up this. Here we go. Okay, so a couple things that I'm looking for here. I have a big range for us again today. We've been in a big range the last 3 days. I'd like us to break it. I don't think that today is going to happen because I do have a big range on my chart. I think we can move quite a lot without actually having a trend. What I'm looking for here is price to come down, a little bounce, and then a continuation down. That's kind of my plan A. Plan B would be something like this, back down to pivot to the reject zone, and then stall. I don't think that the upside has a lot of room up. I do think the downside has kind of a lot of holes for it to fall through. And I'm actually quite excited for a dip before the continuation of this rally.
How far down? How far do we dip, you think?
7750 ES.
Okay, so it's about 25 SPX, more or less the same area. Okay.
Yeah, nothing too crazy. But I do think there's a lot of bulls right now, and in my mind, they're right, but they're early. So I'd like to join them on a better price.
You were looking for a discount. Okay.
Yeah, that's right. But pretty simple game plan. I would take that with a grain of salt. Last 2 days, yesterday didn't trade, but Monday and Tuesday, I was expecting a break of range. We didn't get it. And so I don't want to, hold my breath for that.
And yeah, I'm just kind of looking at the option chain while we're here. And I don't really see anything particularly exciting right now. I'll just put this in as a wish trade, 45 cents for 76.95. I probably won't get it, but sometimes you get these on a pullback. I'm just going to leave that there for now. Anyway, I don't know what happened to Vol Trader. He was yeah, so you see, you get the comments here in the Discord server. And yeah, and I'll be coming out with, like I said, a server guide explaining what you get here, because I know a lot of you who are watching this, there's 264 of you, at least that's what the little eye in the sky says up there, might be curious on what is behind the curtain. And so I'll kind of pull back the curtain a little bit, and you'll see what's there and see if it's something that might be appealing to you. It's 9:02, and I'm basically done because there's really not a lot to say. Oh, wait. Of course there is. Let's take a look, just a quick look in the volatility. Oh, and premiums. Okay, let's see. Where's the low volatility? And there's a few observations I'm going to make. So the obvious, discuss the obvious, the VIX 9-day is probably 3 points away from the VIX. That's a little too low. Uh, so there's not that much vol to crush out. However, and I didn't say it here. And I should have. Despite yesterday having a 30-point expected move, top and bottom, so that's 60-point range, we moved 30 points from high to low. So there was plenty of extra juice to sell even at this low volatility. You have to be careful. You have to know where your levels and lines are. But people who sell premium or who look at volatility through a single lens sometimes miss the point that when volatility is low, guess what? We tend not to move. So yes, you have to get closer if you're selling premium. Yes, you have to make adjustments. But the basic reasoning stays intact. Or for buying brain fart, or for buying flies or spreads or going long. Also, if you're a scalper, expect tighter ranges. You're not going to scalp 15 points as easily as you might scalp 4 or 6 on E-mini. Okay, so the note that I was looking for, I have in the server. Okay.
I got to bounce, Doc, but I'll see you guys tomorrow.
Okay. So VIX is down at a year-to-date low. So what really happened to the hedging? So here, this is from a CBOE note that I kind of did what I do. We had a 3.5% rally. Normally, quote unquote, statistically, that should take 2.8 points off of VIX. It took 1 point off. So vol is cheap, but it should have been cheaper just based on the arithmetic. Now, yes, we came from wherever we came from, etc., etc. This, if, don't argue with me. Argue with the CBOE. Argue with Mandy Sue. So where'd the money go? Skew. So skew is the price gap between puts and calls. I don't know if you guys can see this. Let me. I'm gonna throw it in here. Now, if you like this kind of stuff, it's in the server. Um, Skew is the difference between puts and calls. I don't know if you can see this. Um, Same distance out of the money. And so skew is at a low. So calls are expensive relative to puts, but they're still cheap. And it's low at every expiration from 1 month out to the end of the year. Traders dumped, and here's the typo, which is not the close inputs. So what happened? How did skew get this way? The near the money puts got closed mostly, and the out of the money puts, the 10 delta-ish wings, got bought. So the 10 delta to 25 delta put difference, that's another way to look at it. How cheap is protection compared to itself? Well, the 25 delta is kind of cheap, and the 10 delta is kind of expensive compared to the 25 delta put, the out of the money one. So that seems to be where uh, what was bought. A little bit of wingy stuff. That's at the 66th percentile. So they sold the near-term hedge and they kept the tails. And then the other premium seller thing. And that's my take from the CBOE note and the CBOE note. For those of you that are subscribers, or if not, you can just get it yourself. It's not secret. It's in here. I have to get used to the whole reorganization myself. Here it is, institutional research. Here it is right here. CBOE macro volatility report right here. Comes out every week. Worth a read. Worth a read. Okay, let's see what. Okay, yeah, that's my propaganda. That's my stuff. And that's basically it. Let's take one last look at the chart and see where we are. And you see where we are. We're heading right up to that negative gamma up there. That's where we get attracted to. And yeah. So a new all-time, if we close here, it would be a new all-time closing high. Do we tickle 7,800? I don't know. We'll see. The positioning will tell us that. Looks like the market's happy about something. And oh, we have AMAT after the bell. That should be fun. Okay, everybody, take care. Trade safe. Click like, subscribe, retweet. Twitter people, before I go, I'm gonna see what's going on here. Twitter people, I got one retweet and 3 likes out of, I don't know how many people are watching, a few hundred. So I don't know. Okay, there you go. So you're 1 in 3. The story of your life, the top third, probably the top 95th percentile. I know you pretty good. All right, take care, everybody.